Okay, so let's do this here already. Let's just jump into this. No real hesitation. Is my Wi-Fi bugging out? Oh my god. Okay, come on, Wi-Fi. Any moment now. Any minute now. Okay, let me pause this real. Okay, had to switch the data, but whatever. Okay, so Friday, last day of the week. We have been expanding higher into this bearish OB. My pre-week analysis was really like us coming from here. Let me change it to the blue one. Yeah, us coming from here and then making our way somewhere into this order block before coming down here. Now, with how this week is moving, I don't think that is the play really, right? So that pre-week in this range was kind of wrong, but Jesus Christ, so that was wrong. The larger range, which I was paying attention to, because I mean, if we kept in this tight range, we'd have to show like real weakness at this order block, but we didn't. We kept closing in and pushing higher, and we're above the mean threshold. We're about to hit the high of it, which isn't something, excuse me, you want if you're bearish. Excuse me. So it seems like that weekly OB, you know what I'm saying? The weekly order block here, the bottom of it with this gap. I'll see what we do here when we extend up into that. So yeah, that's that on the day. Extending higher. On the 8 hour, I don't have the breaker here. I don't have that label anymore because now we're above it, close above it, and we're pushing higher. If we do come back into it, then I'll just see what price does, but we're pushing higher or above it, right? Running towards those relative equal highs that I had in the video yesterday. Sorry about that, about the the no sound thing. My bad. I thought I had sound recording, but obviously not. So yeah, I'll just make sure to double check that before I actually start talking, because that was crazy. But yeah, yesterday was basically I wanted to see it drop into this, and now I want to see it drop into these highs, which is basically right at, it's like 10 points away from that. Above these are obviously, Jesus Christ, fat fingers. Jeez. Above these is obviously this imbalance here. I really want to see an overextended poke kind of up into this imbalance up here, like 39.43, somewhere up there. So, oh my god. Okay. Relax. Okay. So, let's put that up there as an 8 hour target. Honestly, I don't really have to put what it is. I could just label it with the time, because I know the green lines for me are objectives. So yeah, 1 hour, 8 hour. That's just 1 hour. I mean, the 8 hour one is overextended. Like that would be kind of what I would like to see. But this 1 hour run, I mean, running up here and then running into this gap, that might be the move for the day. On a 4 hour, okay, I measured the Asian range already. Again, it's above average. It is above average. This one is almost one of the highest ones that we set for the week, but the whole week has just consistently been above average. Than that, and I'm trying to see how that range factors in with the VIX, but again, I still need more. Like I know how, but I want to see, like, do certain VIX prices mean certain Asian ranges, which would equal certain market environments, like reversal or expansion market profiles. So that's kind of what the study is. But again, it's harder than I thought, so I still need more time. But um, I'll probably do like a studies video or something, just for like the intermediate people that watch me for whatever reason. Just like that, like whatever questions you may have with price or something that you want to test, if you don't know how to build it yourself, like if you can't If you don't really know how to do it, I could show you how I did mine. At least one of them. I'm not gonna show you how I did all of them, but the one that I'm open to sharing, I'll share that one. So yeah, okay. So again, equal highs, this gap here, just on the 4 hour now. So it's a 4 hour gap back label. Yada yada. So you see as we push higher, right? Down close candles are basically used as support. So like these ones down, well technically it would be this last one. I wouldn't count all of these as a consecutive order block. It would just be this down close candle here as an order block. We push higher, and then the retrace that happens falls right at that candle, right in this candle's range. Then we push higher, right? So we set a high, we retrace down, and then we expand higher, taking out a high. Then we set another high, right? Then we set another high up here. Then we drop lower, and then expand higher, right? So taking that high out, these uncles candles, show a bullish order block, right? Bullish OB again. Set another high, then we retrace down into around the middle of these candles and this gap before pushing higher, right? To break this high, right? Here. So now here, we didn't really set a swing high, but we set this knuckles candle with expansion upwards, right? So any retrace on the day, we'd want to see it be to continue pushing price, right? We want to see it be supported at this down candles range, right? So let me go on a 1 hour. I think it's easier to see on a 1 hour. Okay, I could take this breaker off because we're out of that. This OB from yesterday, that was pretty cool. It's just the choppy price is what got me, but I'm glad I was at least the right. Yeah, so here, you see this expansion from yesterday? I don't know if y'all can see it, but let me move this back just for now. So the expansion yesterday, right? Now we have this Donko candle with expansion away, right? And now that's the thing with order blocks, because I know there's some examples. I know there's the thing where people are like, okay, it's the last down close candle before the expansion higher, and it creates a gap and takes up high, right? That's what it is. But I've seen examples of ICT videos where we would think that it's this candle as the order block. Everybody asks him, what's the order block? He's like, oh yeah, it's this. But in his video, when he's talking about price in this area, he'd be like, this candle was the order block. So that's to just show you that not everyone really knows everything, and take what people say with a grain of salt. So unless you could directly figure that out on your own, then you're just a super genius. Kudos to you. But as of right now, I'm just gonna use this candle. Well, as a matter of fact, I'm not even gonna stick to one candle. In that case, I'll just use both of these. I'll just look at how price reacts to both of these. So I'll look at how price reacts to that and how price reacts to that if we get down into these areas, because there is a fair value gap here, right? So I just want to see how price reacts to these areas just to see which is which. So that's that. But for the range that we're in, right, we've always the same pattern, you know, high retrace, high retrace, high retrace. So are we gonna get the same thing this Friday, right? Because you could use this swing low to draw your OTE, but I think this range is a little too tight. I don't think price will stay just in this little itty bitty range before moving higher. It might have a more aggressive repricing lower before higher, probably like a morning retrace into like an afternoon expansion or something like that. So swing low here, boom, and then swing high here, boom. So OTE puts us in this range down here, so roughly around where these hypothetical order blocks are. And I say hypothetical because again, I want to observe how price reacts if it gets down here to both of these. If it doesn't get down here, then it is what it is. But if you don't want to use the order blocks, you can just use the gap as your frame of reference. So boop, boop, that. Just put 1 hour, make it white. Put that on there. Oh wait, capital H. All right. A little too dark. All right, so OTE range will put us somewhere in this gap. So can price come back down there? I can see that, mainly because we have these. Move this. Equal lows right here. Right, that's sell side liquidity right there. Okay, so turn the screen up. Brightness. There we go. All right, so it's just sell side liquidity there on that gap. So I could see a run below that. Kind of like what yesterday was. How we were up here. And I saw the order block. And I was like, we're gonna come down into that before taking out the high and going to 38.50 or whatever, right? So we did that. So we basically did the retrace boom for like the AM, and then the PM was expansion higher. So that's what I'm thinking we might do today. Like repeat the process, because I think all the retraces have been down from AM and then up into PM. Let me see. Okay, this day was more like kind of rangy, but the retrace down. The expansion was AM. The expansion was a whole day, really. Yeah, damn. Okay, never mind. What was this one? Ugh, what was this one? Expansion away, and then kind of sell down, at least for the tradable session. The NY. Okay, not really. All right, cool. So, anyway, yeah, that's kind of what I'm looking for. Do we sweep the liquidity here before going lower? And if we don't, then that's just liquidity for another time, right? All these lows are just all these areas. This area here, and this area here, and these equal those here, and these equal those here, and these equal those here. All of these are things that's probably gonna get got or taken at some other point. But right now, we're trying to draw away from that. So, yeah, that's kind of what that is. But that's if we get down there. I don't know if, because that retrace would be, what would that be? From where we are now, at least into the top of the gap. That would be 26 points down for that, and a potential reversal above this high. So that would be 26. What is it? 26 points down, 38 points up, and that's just into the hourly target. We're not even talking about the gap. We're not even talking about the gap. Into the gap would be 70 points up. So it'd be 26 point down maybe, and a potential 70 points up. But even with the Asian ranges being as large as they are, being above average, we haven't really been in like that choppy kind of environment. I mean, kind of, but on a higher time frame, it's just been like not a consistent trend, but clear up. It's not like we're super choppy like around the weekly open. We got above it and we never came below it. So, but I do. That's the retrace that I would look for Friday if I was trying to get long. Like swings into next week or whatever. If you're that ballsy, or brave, but I don't think I'm that brave. So that's that. 15 minutes now. Okay, so I kind of did all of this already, just to save time. But do that. Okay, we have the Asian range, 41 points. The ARE, Asian range extensions, and look how these fibs on this Asian range on this day, on the 24th, right, align with a gap that's like way back from last week. So like the 1, 2, 3, that's like the rough range of the day's range. If you don't believe me, you can just draw your fibs and see where the high or low of the day landed in this area, right? I just have it as green, a target that's kind of easy to hit. Yellow, which is something that's a little bit more overzealous, and then red is like once you hit red, I'm like, okay, that's probably the max extent of the range. If it goes past that, great. If it doesn't, also great. But the max extension on this range extension for the Asian range is around this gap. So technically, feasibly, that should be an area that we come to. But on the opposing end, the downward extension of that range, oh my god, the downward extension of that range is 3650 something, 3655. So the bottom end of the range is 3655, and the top end of the range is 39 something. So I'm probably thinking we're gonna get somewhere in between the 2 and the 3. So I don't want to be like, because I'm not really that guy anyway, but to be like, hey guys, I called the high of the day. I don't really care about that. But from the 2 to the 3, right, is around 41 points. So half of that would be 20 something points, right? And half of that lies, okay, like right above the gap. So half of that is like 30. If something in the day's high, it might reach like 38.55. I mean 38.85. Sorry, like around 38.85. That's what I'm kind of looking for. To see. So somewhere above the 2 and 3 is where I think they're gonna take us. And we obviously have the premium discount array. Midnight open to the high before 8, which may be overtaken because we might push higher than this high, so I'll probably have to adjust it because it's still like 7:36 Pacific Standard. I mean Eastern Standard Time, not Pacific. I don't know why I said that. But yeah, high, and then I just copy this exact box and I just move it down to the midnight open. So it like measures the range. It's like basically the same range from this open to the high, and this open to the projected potential low area. Yeah, but all these like lows by London, that looks like liquidity that can be swept before we make our move lower, because London market has kind of been rangy, and that's another thing too, that Asian market was so like overextended. Like, look at it. It was down and then just up, 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 up. Like this doing this, Asian market extending so much, typically means that London and New York are gonna be, oh my god, that London and New York are going to be choppy sessions. They're probably gonna be like range bound or reversal type markets. I'm hoping that's not the case because I just want to see price extend up so we can get it over it. But they could chop us as well today, and that's another thing I have with the Asian being so extended. Like London didn't really go anywhere. Like it started here and it went down and it came back here. So it went down to it went up. It came up to come down to come back up in the area where it started. So that's really consolidation. So if anything, I wouldn't even look like intra London, like swing lows and highs into London. I would look if you're looking for liquidity to be ran or like purged. If you're that type of trader, technically, almost all of us are purge traders. We just don't identify with it. Like we don't say that we trade purges or raids, but a turtle soup long or short, that's a raid. If you're playing a breaker, you're also playing a purge. You know what I'm saying? If you're playing a fair value gap, then you're also playing some type of purge. If you're playing an order block, you're also kind of playing some kind of purge. So everybody uses raids or sweeps. It's just, I don't know if you know that that's what you're doing or looking for. But if you are a person that typically looks for sweeps, the areas of Jesus Christ, the areas. Okay, this shit is annoying. It keeps hitting the corner of my hand. I'm sorry. The areas I would look for a sweep before we move lower are just London's highs or lows, right? So either this area here with these equal highs up here at 38, 34, or 38, 16. So that's what that is on a 15-minute. And then this is like 7 something and more. So I don't even know how price moves around this area. So I won't really be doing any live price reading here. I'm going to save that energy and time for New York. So we got to wait until the price gets here before we do anything, right? So, and for the 8:30 open. So we got to wait until it gets here for that. But that's kind of my thoughts on that, really. I don't think I have. Oh yeah, almost forgot. Okay, go back to the day. So if you want to see, I'm still learning divergence, right? I still kind of suck with it, but baby steps, right? So I'm not really gonna look at the divergence for the indices just yet, because that still kind of annoys me, how confusing it is to me, but how simple it's explained, because I know I can understand it, but it's just not clicking. So you should look at the dollar, right? Because the dollar is normally inversely correlated with indices. So like if it goes up, they normally go down. If it goes down, they normally go up. So how we have those targets upwards for the indices to run out. Oh, excuse me. The same thing applies for the dollar, right? The exact same thing. So with the dollar, you see on the past 3 days, we have been ranging inside of itself, right? Price has been ranging inside of itself. What I mean, okay, let me show you. So we had this day's high and low. Make that white, make that black. That's not black. All right. That's still not black. All right. So we had that high and low, right? And then we had this day's high and this day's low. I'll make that a different pattern of price. And then we have currently this day's high and this day's low. So the highs and lows that we have set are getting tighter and tighter and tighter, and that normally means that some form of expansion is coming. Like when the days ranges like onion or like layer into each other or within each other, that's normally a form of accumulation, right? That's a factor of the power of 3. And the power of 3 is just simply the ICT video called accumulation, manipulation, and distribution. Basically means that accumulation is price just bouncing up and down, ranging or consolidating. And manipulation would be a quick run on one side of the liquidity of that consolidation range or accumulation range. And then distribution would be where price actually wants to go after manipulated stops. So it'd be like we bounce, maybe something like this. Like we bounce, we go up and then we come down, and we go up and then we come down, and then we go up and then we come down. And you're like, what's going on? And then price does this. And you're like, oh yeah, we're going to the moon. But all it really did here was run this area's buy side liquidity, right? So this is the manipulation. It catches you. It's like, yeah, we're going up. We're going to the moon. 4,800. Woohoo! Hold, diamond hands. And then it comes this way because it consolidated. It accumulated here. Then it manipulated above. Cleared stops out, right? Caught anyone that was going short. Tapped their stop. Tapped people that were trying to get in long after the breakout. Caught them. Picked everybody up. So now smart money has opposing liquidity to sell to, and then it distributes meaning it distributes / deliver, meaning it carries price, it takes price, the algorithm takes price to where it was actually intended to go. So boom, and that's how it works. And you can use this in actual price, like with multiple candles. You can use it with like multiple ranges of candles, or if you're on a higher time frame, you can use it as the candle plays out. So it would be something like, kind of like today. Okay, so let me just use that example. So we opened here. All right, let me get the exact numbers. So we opened here at 104,378, right? And the manipulation could have been this high up to, excuse me, 104,513. That could have been the manipulation. So accumulation at the open, excuse me, manipulation at the high. And if we're bearish, we'd want distribution below the open, into the potential lows. We want accumulation here at the open, manipulation at the high, and then distribution down into this low, and then this low, and then potentially this low or something. Like that's kind of how you want to see play on a higher time frame candle. I'm not gonna go too in depth on that because there is a video for it. Watch the video, take notes, find your examples of price, and work from there. But yeah, we have this big tight range. Like we're just getting smaller and smaller and smaller and smaller. And each, I didn't even measure what's the difference between each range. Okay, that's 0.7%, and this range is probably like, okay, 2%. Okay. So yeah, we've been doing that, coiling tighter and tighter and tighter. We cleared that. Yes, we've been coiling tighter and tighter and tighter. And as we do that, obviously that sets clearer targets. Right, and you can even see it on a 4-hour. You know, range low, range high, range high, range low, range high, range low, range high, range low, until it's down to this one candle, this 4-hour candle that we're inside of. Let me put that off the hour, because y'all get the gist of what I'm talking about. At least I assume so. I don't know. No. Yes. Okay, so see we're in the range of this 4-hour candle. So I want to see some manipulation or some run above this, which would mean the indices want to go lower, right? That London sell side liquidity sweep. So run above that, and then a breakdown below this low, and then mainly this chunk of lows right here. These lows, I could do without it taking, but if it does, great. You know what I'm saying? That would just add more juice to the indice machine, right? So maybe targeting this gap down here. Let me finish the gap somewhere in this area here. Maybe. So this is kind of where I want to see the dollar run, because I mean we tapped this imbalance already, right? But now that we're kind of breaking down a little bit, hopefully, because that's we can't force it, but that's what I want to see us run up a little bit, probably take out this high, maybe a little bit more overzealous into this volume imbalance right here between these two candles. So it'll be roughly like 104.40 and 104.37, so in that area, and then make its way below these lows, and then hopefully below these lows. But I at least think it could run these lows. These will seem overzealous. But on the hourly we have this, right? And then on the 30-minute we have this, right? So we have this fair value gap that we filled already. Are pushing in. Are we pushing out into this bearish OB? So will that add more confluence to the short, because we're in it right now? But remember I said I wanted to kind of run above that range high. So this this OB isn't the one I'm looking for it to resist at. It's more so this one up here. These 3 consecutive up close candles. See, this is kind of the range I'm looking for it to get into. Do we get up there and like hit this gap up in here before coming down lower? like run that before running all of this out below. So that's kind of what I want to see. I think that's it now. With the VIX, I mean the VIX is kind of inversely correlated to indices. I am doing a study on it, right? But if I want the exasperated move that I'm kind of looking for with the 20 points down and like 70 points up or something, then we kind of want the VIX to be a little higher, because volatility normally equals higher ranges or wider ranges. So, and we're in this giant 4-hour imbalance, as you can see. We did come down and tap it, but I don't really think that's enough for it. I think we might come down and fill this wicked area, like run this, because remember wicks don't have anywhere as much volume or liquidity as price. Like, not liquidity, volume. That's the word I want to use. They don't have as much volume as price. So we're at that area now. So I want to see, do we potentially run down and see the VIX cool off at around like 27 something? Not really sure. I'm still studying that, so that's kind of a shot in the dark. But I think that's everything. This is going on 30 minutes now, so I don't think I have anything else. But those are my thoughts on the day, and what I expect. Take it with a grain of salt. I'm not financial advice. I'm not a financial advisor. Trade at your own risk. I'm gonna need to get that memorized just for my my safety. But I think that's everything. Jesus Christ. Yeah, my fingers are too big. Yeah, this is crazy. But I think that's everything I have. I'll see y'all at NY Open. Bye.